Okay, good evening, everyone. Welcome to another episode of Sequoia Commercial Lending Training. We normally have our training on Wednesday night, but today is a special guest. Due to the conflict, we changed to Tuesday night. So again, for those of you who cannot make it to tonight's training, just like usual, we're going to record it and we will post this onto our YouTube channel. Okay, so before we do that, again, ladies and gentlemen, January is here, is already halfway through January. Does not matter where you are. I always tell people that, hey, setting up a New Year's resolution is good, but unfortunately, a lot of us just cannot follow through. It's just a too long of a commitment. So what I suggest everybody to have a new month resolution. So what are we going to do on January? February is here. How are we going to build up our business? So on and so forth. You got the idea. And ladies and guys, this really works. Once you put your mind into it, once you focus what you wanted to do, things will start changing. And we have so many different programs on our platform. We just launched the SETC 3 weeks ago. We already have over 1,000 cases in Sequoia. How many of those 1,000 cases belongs to you? And how many more 1,000 cases will you bring in? Again, this is, if you really wants to focus on one thing, focus on something that is easy. SETC, you are not selling anything to anybody. You are actually literally give money to all those 1099 people. Okay, so go out there to let them know that we have this service and have them to apply for themselves. So again, I don't want to keep going on and on and on. So today we have a very, very heavy hitter on our platform. And many of you already know him, know his name, and both myself and Jason has been talking about him since 2003, and he has been doing a lot of study, a lot of planning in the back end. And finally, we bring him up front to meet everybody. Okay, so this gentleman has a lot of credential, has a lot of experience. I love to learn more and more and more from him because he has tremendous amount of experience in commercial lending. He used to partner up with a company called lendingtree.com. I'm sure that a lot of you heard a company. If you don't, do a Google search and see how big lendingtree.com is. And he was the senior partner for that particular company. And after that company go public, he cashed out and he is a lender. He became a lender, and he funded quite a few of our deals. And along the way, we have been talking to each other through Jason, and of course, so we share with him our platform and what we wanted to do right here. And he is paying a lot of attention to see how we grow. And now finally, he decided to come in here to be part of Sequoia, and most importantly, is to train our agents like yourself, like myself, how we can generate deals, how we can close 3 to 5 deals a month. So without further ado, let's welcome Mr. Jarrod Ellis onto the floor. Jarrod, the floor, it's yours.
Thank you so much, Alan. I appreciate that. You built me up a lot. I hope I don't let you down. Alan, great to be here. Great to work with you. A lot of work has gone on in the background leading up to this year, really. So again, great to be here. Great to see all of you guys here. And for those of you who might be listening to this recording, the change in schedule is my fault. I appreciate everyone's patience and grace giving to me. I have family kind of obligations on Wednesdays for the next 2 months. So I let Alan know that, and he changed it. So I appreciate everybody. I think tonight what I want to do is just introduce myself. I know a lot of you guys have been involved with Sequoia and heard about commercial lending from Alan, from Jason, and from others. But I want to introduce myself, give just a little bit of background on me. I do not like talking about myself, but I'm happy to answer questions as they come up. But what I do like talking about is how to help people. And I primarily do that through commercial lending. And I'm going to just kind of walk through what I see in the industry, in the market, give you some kind of technical points to hopefully take away tonight and in the coming weeks and months ahead. and then obviously open it up for questions. Feel free to write questions in the chat here, on the platform. I'll read through those. I might be able to just answer those just as I go, maybe at the end. And then also we can open it up for kind of verbal questions as well if we want to have a conversation. I'm good for as long as you guys need me. And so let's get started, if that's okay. So again, Jarrod Ellis, I've been in the real estate finance business for about 24 years. I started a really long time ago, 1999 at LendingTree. And that was right around the time they went public. So we went public, grew that for several years, ended up selling that to a very large company, IAC. So large people don't even know who it is. But Barry Diller, some of you may know who that is. He bought LendingTree. We cashed out, and from there, I did several things. I owned title companies. I owned marketing companies, lead generation companies. I owned mortgage companies. I owned construction companies. I've bought real estate, developed real estate, and sold real estate. So most recently, I spent about a decade at a private equity fund that focuses on the kinds of loans that Sequoia primarily does on the real estate side. So, fix and flip loans, ground up construction loans, bridge loans, as well as rental loans, DSCR loans. So for the last 10 years, we went from being about a $15 million fund in kind of 2014 timeframe, 2013 timeframe, 14, to a $350 to $400 million fund as of the end of last year. So that's what I've been doing. Timing is great for me. A lot of changes in the industry. I've talked to Alan and Jason forever about working with them. So here I am. A little bit of background on me. Happy to answer questions, but that is, Lord willing, all I'm going to talk about myself for the rest of the night. Okay. So I think as far as scope and scale over that 20 years, we've originated about $10 billion in loans, 10 billion with a B. So that's a lot. It sounds like it probably sounds bigger than it is, but you have to stay at this business a very long time to originate, that kind of volume. So it's been a great ride. In terms of where I am, I live in Charlotte, North Carolina. This April, I will have been married about 25 years, 25 years. I got married in 1999, and I have 3 kids, 20, 18, and 15, and they're perfect. So obviously they have a good mom, and my wife and kids are the reason I do this. So that's just a little bit about me. So let's jump into the discussion on loans again. Shoot questions over there in the chat if you have them as I go through this. As we know, the last, call it 18 months in the real estate business and just the economy in general, it's been very, very unique, right? We had a unique time in 08, 09. We had a unique time during COVID. And in the last 18 months post-COVID, we've had a very unique time. Inflation was and is, but particularly was, a real thing for quite some time. It caused interest rates to go up, and it's been very difficult from a supply standpoint, just general activity in the market for houses to sell. And houses selling is it's a key component for us to be able to do what we do by providing financing on real estate development projects, right? So the lack of inventory, the lack of activity over the last 18 months has hurt everyone's ability to generate loans, right? Which is what we do in commercial lending. So, however, there is always a market for commercial lending. So again, I started in 99. There was 9/11, as we remember. There was a recession right after that. 08, 09. Major recession, the Great Recession, they called it. COVID, and then the last 18 months post-COVID. In all of those markets, we made loans. In all those markets, we were able to find opportunity. They say lending is the second oldest profession in the world. We won't talk about the first oldest, but it's the second oldest profession in the world. And there will always be a need for companies, for individuals to borrow money. All right, that kind of goes without saying, but it's important to remember that when you go through something like we've been going through the last few years. So as we come out of that, interest rates have been stabilizing. They've actually come down some. They've flattened. They're not going up. We actually see a lot of opportunity heading into 2024, right at the beginning. So what I want to do is talk about what I see as being kind of the advantages of being in commercial lending, right? And this is just my view of the world, the market. Just want to let you guys know how I see things. Commercial lending advantages. This is a non-regulated industry. Regulation is good. I'm not against regulation. There are some regulations in our industry, right? There are usury laws, right? You can only charge so much interest, on a per state basis. But in terms of licensing and the hoops you have to jump through to originate a loan, to do a deal, to get paid for a deal, there are no barriers to entry that exist other than your willingness to work, of course, like there are in the conventional, primary home loan world. You have to get licensed, you have to work for a bank. Some people have to have securities licenses. There's none of that in this commercial lending world, which is a great thing. There are also fewer nuances and guidelines, right? So as an example, in the banking world, in the regular kind of consumer world, tax returns are a big part of every loan that gets done. In the commercial world, 99.999% of every loan that you do, we don't look at tax returns. We don't underwrite personal income. It's mostly asset-based. We do underwrite the borrower, but we really want to pay attention to that project, to that asset. We need to know that the borrower has at least acceptable credit. They have some experience. But the three things that you look for in a borrower: credit, experience, history. I'll say it again because as I work with you guys, as I talk to you over the coming months and years, you'll hear me say it over and over and over again. We evaluate a borrower: credit, experience, history. Credit, experience, history. That's it. If you know those three things about a borrower, that's all you need to know, right? There's more stuff to learn and know and understand about the property. We'll get into that in future trainings. But so fewer nuances and guidelines. And in this market, there's plenty of liquidity. In other words, capital is readily available to be deployed on good projects. And sometimes okay projects, right? Not every project has to be perfect. I don't want to misstate that. We're not looking for the unicorns out there where everything's perfect, great borrower, great property, no hair on these deals, so to speak. But the project, the property, the deal has to be generally good. Plenty of liquidity. That was not the case 6-7 years ago. Liquidity was much harder to come by. I'll talk a little bit more about that in a little bit, but the industry itself, the commercial lending industry, has matured. So plenty of liquidity. And businesses who are our borrowers, right? We don't lend to individuals. We don't lend to, any of us here that own our homes. We don't get loans from Sequoia, right? We go to a bank or some other consumer lender to get a loan. Our loans are to businesses, and businesses will pay fees, good fees, higher fees, for the convenience of working with a lender like Sequoia that doesn't have all the nuanced underwriting that banks do, for instance, right? So commercial lending landscape, that's my overview. That's the way I see the world at a very high level. By all means, ask questions. So, okay. So current landscape, in commercial lending. Commercial loans are becoming more of a commodity. So, again, 6-7 years ago, well, let's go back 20-25 years ago. Most of these loans that we work on at Sequoia were done by local banks. Vast majority. There were a couple of individuals in any market. You had your rich guy or gal that just had money and walked around and financed projects. There was some of that, but by and large, local community banks were doing this kind of lending. Fix and flip loans, ground up construction loans, or development loans for new neighborhoods, bridge loans, and then rental loans. 08-09 hit, and without going into all the nuances and detail about that, the community bank industry fell apart, right? If you remember, those of you, I see a lot of young faces here. Some of you might not remember that time, but if you're old like me, you remember when 08-09 hit, community banks either went under, they merged, they just got bought. A lot of them shut down. But what happened was banks stopped lending on these kinds of projects: fix and flip loans, ground up construction loans, bridge loans, DSCR loans. They just stopped lending and didn't even try to attempt to lend again for about 10 years, right? So not only, and keep in mind, this is the key, and this is why we have the opportunity that we do. Not only did the banks, the companies themselves, go out of business or stop lending, on these kind of loans, these projects, the people that knew how to originate loans left the industry, or they just went and did something else at the bank. So the expertise needed in the country to originate construction and fix and flip loans went away, and they did not come back. So about 10 years ago, roughly, maybe 7 or 8 years ago, there started coming this industry, this commercial lending industry started to grow up, and people either knew in their careers, learned this business, but those of us that had been around and had done these loans started the private equity fund that I mentioned and several others. I mean, there's a lot of competition out there at this point, but still plenty of opportunity. So that's why we have the opportunity that we do. But it is more of a commodity. More people, more lenders have come up. So when you go, just like if you get a loan on a car or a loan on your home, you go to a bank, bank 1, bank 2, bank 3, all deals are roughly the same, right? Roughly. Same thing has happened as our industry has matured. You go to Sequoia, you go to, competitor A, B, and C, the term sheets are going to look roughly the same. There certainly could be changes. It's not as much of a commodity as a home loan. However, for the most part, it's a mature industry. And so the decision for borrowers, the decision for the brokers that you run into, it will come down to speed, to price, to an extent, and service. Speed, price, and service. Whoever you speak to about loans, they're going to want to know, obviously, what does it cost, which we can address. How quickly can you close? I'm sure many of you have heard that before. Hey, when can you close, right? I got to close next week. I got to close tomorrow. I got to close in 2 weeks. And service, and this is, I don't want to gloss over service. I want to highlight service because it has never ceased to amaze me. When I was very young in my career, and I didn't know how to spell mortgage. I did not know anything. But I did know how to return people's calls. I did know how to reply to emails. I did know how to pick up the phone and reach out to somebody and talk to them. Just being available, just showing up, I would say is 60 to 70% of the battle in this business. Communication, being available, returning calls, returning emails, staying in front of people, 60 to 70%. Now, you also need to understand, the products. You need to be able to speak intelligently about the products, or get Alan, Jason, Jarrod, get somebody on the line with you to talk about the products. You do not have to be a subject matter expert. So you do need to know about the products, but just being available is absolutely key. So, moving on with just kind of the current landscape in most major cities, and I heard from some of you and where you're located, in most of your cities, there are major supply issues with housing, right? Again, starting back during the 08-09 recession, not only did banks fold, what else folded? What's the ancillary industry that kind of folded and people stopped doing what? Building houses, right? Builders went under. Builders just stopped building. And if you look at the housing starts in 04, 05, 06, 07, and compare it to before the pandemic, 2019 and the beginning of 20, we still hadn't caught up, not even close. Although families were still being formed, and as we know, people still having babies, right? That's not going to stop. So we have not kept up with the need for housing by building or even rehabbing existing housing. So that's why there are massive, massive supply issues. And I could go into the baby boomers not moving. I could go into everyone has a 3% mortgage. Why are they moving? There's all these other reasons as well. But the opportunity is gigantic in especially the ground up construction business right now for builders. Find these niche, medium-sized builders whose banks don't really want to lend too much to them. They may lend some to them, but they're not going to just open the wallets and say, hey, just go crazy. Our space can provide the liquidity, can provide the capital to these builders to get housing built in their communities to help address that supply issue. The other issue in the last 18 months, inflation, right? How the price of groceries, the price of labor, the price of materials. As we know, everything's gone up, including housing. And so there's an affordability issue that's been created as well. So as interest rates stabilize and come down, there will be some markets where pricing will correct or at least flatten. And that will open up kind of opportunities and transactions and activity, creating opportunity for us to provide loans for investors. So looking into 2024, it's projected, housing starts have already been up year over year in the last 2 or 3 months for the first time in 18 months. So builders will build more homes in 2024. Consumers will buy more houses. This week, we had two units. I built 2 units in Greenville, South Carolina. One of them sold in October. The other one, CO in October. Nothing happened at the end of the year. It's like, great location, great, like checks every box. It's like, I was like, this is a unique property, not too big. It's affordable. It's reasonable. It's great. It's going to sell. Nothing happened. And then all of a sudden, just this week, we had an open house Sunday. 9 people showed up. Everybody wanted to buy it. We went under contract last night. So I'm already seeing some activity in markets that, I'd been saying for a few months, this should be going. What's going on? I think everybody just kind of took some time off at the end of the year, but 24 consumers are going to start buying. So, and as I mentioned earlier, affordability is an issue. So a lot of investors, as they look to solve the supply issue, and because affordability is an issue, not everyone can buy, not everyone can afford to buy. So a lot of investors and builders are doing what's called build to rent. Some of you might be, familiar with that phrase, some of you not, but that's just where if I'm a builder, I'm going to go take down some land, build 1 to 10 to 20 or 50 houses with the sole purpose and expectation I'm going to rent those out. I'm not going to sell them. I'm going to just rent them out. I'm going to get as cheap of a loan as I can, put renters in there, let them pay the mortgage and call it a day, because the market's not going to be able to, those houses won't be absorbed by the market given affordability issues, right? So a lot of build to rent opportunities out there as well. So overall, 2024 is shaping up to be a really good year. 23 was not great for the industry. There was opportunity. We made plenty of money, plenty of loans, but it was not the same as it had been the last several years. So 24 is shaping up to be better. That's my view of the market. So let's see here. I want to look at I do not have a title company anymore. I'm just looking at some of the questions in chat as we go along. I'm going to get into kind of the opportunity here in a second. I don't have a title company anymore, so I cannot help with that. I've learned coming from an insurance background that success is inevitable if you do the right things long enough. Absolutely. I'm new to lending, only a few months. What are the right things to be doing on a daily basis in commercial lending, like daily activity? Fantastic question. Talk to as many investors and people who want money as possible. So sounds easy. I'll explain it, and we'll have other sessions on a topic like that. Like lead generation is really what you're asking, right? And that was from Victor Miranda. So Victor, you're asking about lead generation, and an extremely important topic. We'll have other sessions, but generally speaking, there are a few different ways, and there's no magic bullet. It's going to be what works for you. If you're, you'll learn with me, I'm a pretty blunt guy. I just kind of say things how they are. And I rarely offend people, but I'm pretty blunt. So if you're an introvert, getting out there in front of a lot of people, that could be tough, right? That's just not what gives you energy, and it's not your thing. In a group like this, there might not be a lot of introverts. I could be wrong. There could be a few, but social media advertising, being very active on LinkedIn or Facebook, finding connections and people and just putting yourself out there is very important. Local real estate, look up REI, real estate investor groups locally, wherever you are. Just Google it and find out, when they're going to meet. Show up, pass out your business cards if you have those, or just your contacts with your phones. Tell people, when you tell people, listen, mark my words. When you tell people, hey, I have money to lend, you will not have a problem with people following up asking you for money. Now, the filtering out the noise, filtering out the responses that you get to identify which are the good deals, which are the bad deals, which are the okay deals. That's the trick, and that's the thing. Those are the things that we can train you on and help you with as we go along. But putting yourself out there, going to as many groups, realtor offices as possible, and telling people, I'm a lender. I have money to lend. Here are the projects, or here are the types of properties I lend money on. And then just following up. So we'll get into more detail later, but great question, Victor. Wanted to answer that. Where or what part of the real estate industry do I contact first to entice them to refer their clients to Sequoia Lending Funding, West Orange, New Jersey? I would always start with, and thanks, Mark, for that question. I would always start with people that either broker these kinds of deals. There are mortgage brokers in your area that do nothing but find clients all day long. And if we have excellent sources of capital. When I say excellent, they are fast. The leverage is high, meaning we can lend a high percentage of the project's overall cost relative to competitors, and the price is very good relative to competitors. So we're not bank pricing, to be clear. We're not. We're going to be 200 or 300 basis points higher than the rate you get at a bank, if the bank would even finance the project. Probably not, but if they did, the bank would be cheaper. The bank would not even be nearly as fast as we are. So, brokers, mortgage brokers in your area would be a good place to start, as well as builders and contractors. Most builders and contractors do work for clients, but they also do work themselves. They'll find a property, rehab it, and sell it. They'll just flip houses themselves. Find a list of contractors in your area. Just Google it. Just find a list of contractors, connect with them on LinkedIn, Facebook, wherever. Tell them you have money to lend on the kind of projects that they do, and develop that relationship, and then keep following up. So, okay, and then I'll keep going here after I answer Erica's question. Do you believe I should also learn basic commercial underwriting when bringing prospective borrowers to Sequoia? If so, point me to the resources for such learning. The answer is probably not a lot of detail underwriting. Now, I believe what we can do is provide a general matrix. Alan and I can work on providing, hey, a high level matrix of our products for you to be familiar with what products we have, generally what we offer, just broad guidelines. But in terms of getting into the specific underwriting guidelines, you really don't need to do that. If you want to do that, it's a separate discussion that we can have. But in terms of, for the purposes of this group and the function that it's going to play, you really don't need to be any way, shape, or form an underwriter to do this, right? We can just teach you about the products, and then as you'll learn, as you bring in deals, you're copied on the emails, you're on the phone calls, you'll learn how to answer these questions, right? I tell everybody, hey, just get me on the phone with a borrower or a broker, listen in, and you'll learn hopefully plenty. I've done this a couple of times, so I'm pretty confident that we'll be able to, to get their issues addressed and get them the money that they need. So, and you'll learn as we go. So great questions. In terms of kind of the opportunity, in this space that I see for you guys. So again, me being blunt, I like to just say, hey, let me just walk you through what a deal looks like and what a pipeline looks like and how much money you could make as I see it, right? Just to throw it out there to let you know the opportunity as I see it. If you look at all the data in this industry that's available, the average loan amount is about $300,000, right? So if you target about 75 basis points that you're trying to earn on that $300,000 loan, 75 basis points is 0.75%, right? So a little less than 1%. Sometimes you may need to go as low as 50. Sometimes you can charge as much as 150 or 1.5%. Then and you target the number of closings per month at 5. All right, that's your goal. You should be able to close 5 loans per month. That's what I tell everybody. So your activity should lead you to carry a pipeline of 10 loans at all times, 5 of which should close kind of on a rolling basis. So as 5 loans close, you're replacing them with 5. You've got 10 loans going at all times. If you charge on the lower end of that scale I gave you, 50 to 150 basis points, that comes out to $11,250 a month in income, right? So again, I'll go through that again. $300,000 average loan amount, target 75 basis points that you want to charge and get paid for. You work with the Sequoia lending team led by myself and Alan, and you carry a pipeline of 10 where you're closing 5 a month. That will lead directly, the math leads directly to $11,250 per month. As you go along and you create what are called sticky relationships, meaning repeat borrowers, right? You meet somebody, they do 2 of those a month. If you're in, Orange, New Jersey, or they're on the shore in New Jersey, and they're buying those older houses and they're rehabbing them, or they're knocking them down and building new houses. And they come back to you over and over and over again, and you're dependable. When builders and investors find dependable capital, they come back over and over again, and they will pay within reason what you tell them it costs. So if you can up a little bit, what you're charging, maybe charge 100 basis points, and you charge a little bit higher of a fee because you're so dependable, and you can close closer potentially to 7 or 8 loans a month, making $20,000 a month is what you're looking at that point. Becoming extremely good at what you're doing. And you have 10 to 20 key relationships that feed you deals month in and month out. In other words, you're an expert at this point, right? This is the goal, right? This is not, where you're going to be next month. I don't want to overstate that. But when you become an expert and you've just got sources feeding you deals, and they're good deals, and you're charging, in the middle of that range, and you're closing 10, 12 loans a month, you're going to be making $500,000 to $1 million a year. Again, that's just simply the math. the best people in this industry, that's what they make. Doesn't mean you have to be the best. I don't want to, you know, I certainly don't want to sugarcoat that or say, hey, this is get rich quick, or this happens in 6 months. Nope, it takes a tremendous amount of work. But consistency, that is the key. So, so just kind of to conclude, and then I'll kind of turn it over to questions, and I'll answer a couple of others that have come in. Everything we discussed here is not in any way, shape, or form a pipe dream. This is not best case scenario. I mean, this is very, very realistic. You know, maybe you don't make 11,250 a month, but if you close a few loans, you make 7 a month, and you build to 11,250 in a year or two. But this is not just attainable. This is absolutely what you should expect if you can make the right relationships. I mean, that's this business and this role that you're in. It's all about the relationships. The next thing I want to tell you is I'm here to help. I can't, you know, one person can manage about 6 to 8 people effectively. I can't manage everyone, but between Alan and myself, we have a pretty high capacity to work. That's one thing I've learned about Alan and Jason, who I've known literally forever. We can work, and we are here to help. And between the 3 of us and many other resources I have as well, I have a few other people kind of work for me and have for years now. We have the resources and the capacity to help you. So we're here to help. And yeah, I just want to say, hey, I'm looking forward to working with you. I really am. I love helping people. Again, I don't know how to do much, but I have loaned money for several years now, a couple decades. And so this is my area of expertise, and this is where I can help people. And that's my passion, helping people. So look forward to working with you. I'm going to answer a couple other questions here. Here we already have the matrix and all docs needed, basic website drop down, perfect. With the products we offer, in your opinion, what would be the top 3 you'd focus on? Great question. Let's see. I'm relatively agnostic about the products. I've originated a lot of all 4 products. So fix and flip. Again, I focus on the real estate, right? Like there are business loans, or there are a lot of other loans that you can get into, commercial, but you know, I focus on residential real estate. That's the biggest net that you can cast, right? In terms of all the properties and loans out there. You're going to cast the biggest net by saying, hey, let's go finance residential real estate, right? So right now, I'd say the biggest opportunity is probably DSCR loans, rental loans, probably. The fix and flip loans are certainly out there. That is a highly competitive space, but they're out there. And I think it'll be interesting to see in 24 if that kind of comes back and kind of supplants the DSCR product for most people in terms of just number of units, right? Opportunities. So those are definitely the top 2. I think ground up construction would probably be my 3rd one, simply because I know the need is great. It's sometimes harder to get those approved and closed simply because you're dealing with land, right? When you lend money on a ground up construction deal, you know, unless you have it kind of mid construction, the foundation's already in or whatever, vast majority of the time, you're dealing with dirt, right? It starts with dirt. Even if it starts with a structure, that structure is going to get torn down and then a new structure is going to be built. Lenders are extremely picky when they're exposed to dirt. The reason 08, 09 happens so intensely for builders is that many of them had these loans out on vast amounts of land, right, with the banks. And then when lending stopped and they couldn't get the vertical construction funds to finish, they were just left with dirt. And when they couldn't service the loans, what happened? The banks foreclosed, right? And when the banks foreclosed, what did the banks end up with? A bunch of dirt. and they had loaned $100,000 on that dirt. Now it's worth 50. So they had to write it off. A lot of banks went under. So most banks, most lending groups remember that acutely and try to stay away from dirt. So if it's a good deal, it's a wonderful product. I put it number one if it's a good deal. Finding good deals is the key. So I would start DSCR. Rental loans are out there. They're all over the place. I'd focus on fix and flip. I'd focus on ground up construction as well. So DSCR loans, please define what this means, Mark. Absolutely. It's a rental loan. So DSCR stands for debt service coverage ratio. All right. So that's a technical term. It's a ratio that when you have a rental property, you need for the rents to be able to service the debt and all of the fixed costs associated with owning that property. So typically, let's just say I have a property and I get $2,000 in rent, and my principal and interest payment plus taxes plus insurance plus HOA fees all add up to $1,500, right? So I've got $2,000 to cover $1,500 in costs, right? So my rent's $2,000, my total costs, my payments, all the payments are $1,500. That's a solid 1.25 roughly debt service coverage ratio. If I have a ratio below 1, that means that my costs exceed my income, my rent. That's not good. That means you're losing money every month. Now, if it's an appreciating, market where houses are going up in value, could make sense to lose a little money each month on the rent, but not ideal, right? So in our industry, rental loans are often referred to as DSCR loans because that DSCR, that ratio, is kind of a key variable that is associated with the deal. So hopefully that makes sense.
Jarrod, if you don't mind, let me jump in for a second.
Yeah.
So yes, what I want to share with everyone is that in 2024, definitely we see it's going to be a very good year for us on DSCR loan, just because if you don't know, the rate is actually dropping. In 2022, 2023, as the Fed keep raising up to the prime rates keep going up, and now the prime rate is at 8.5%. And at the peak, what we see is the DSCR loan, you can get it for 9%, 9.5%, and sometimes even 10%. But starting last year, in November of last year, we start to see rates start dropping. So right now, at this point, I believe that the lowest that I have seen so far, probably Jarrod, you can correct me if I'm wrong, since you're the lender, we see rate in the sevens, in the high sevens right now. What does it mean? It means that another wave of refinance is about to happen, and another wave of cash out is about to happen. So it is for us to get up to, just like Jarrod said, go out there to talk to all those investors. And this would be a very, very good year for us if we just focusing on one product and focusing on the DSCR. It will generate you a lot of income.
Yeah, it's good. Yeah, absolutely. That's great. Yeah, so I've seen rates in the mid sevens, probably 7.3, 7.4, for the right situation, right borrower, right property, et cetera. Lending is cyclical. So just remember the cyclical nature of this business. And what I mean by that is for the last 18 months, people have been, well, not maybe last year, people have been paying much higher rates, right? So there's a whole year worth of data, not as many transactions. It's not gigantic, but it's still significant. Like I have a couple of loans that were taken out at higher rates just because I wanted to do the deal. But as rates come down this year, all of those loans that got originated in the last 12 months, I'm not that far into it. I'm 12 months into it. It's a 30-year loan. If I can save a couple $100 a month, I'll absolutely refinance that loan. So that, and then the other thing on the purchase side is, a lot of investors have been sitting on the sidelines. Like one of the reasons there weren't as many transactions last year is they're saying, I can't get this property to cash flow, right? Remember the DSCR discussion we just had? If I've got rents at 2,000 and my total payments are 1,500, great. Well, if to Alan's very good point, if you've got, you know, mortgage rates, long-term mortgage rates at 9.5%, 10%, that 1,500 just became 2,200. I have zero interest in buying this property and losing $200 every month. I'm just going to pass. So as rates come down, there will be more buyers that say, okay, yep, the mathematics now makes sense for me to buy, you know, a couple of properties. So activity, volume is just going to pick up. A lot of opportunity for sure.
And also at another point, Jarrod did mention that way in the back in the days that in 2008, a lot of the loan officer left the bank and they never come back. And actually it's happening right now. A lot of the banks are not lending anymore. So many people that work for the bank as a loan officer, loan originator, they cannot find deals anymore. They have to leave. And that is the perfect time for them to get involved with Sequoia because they already have a book of business. Think about this. They already have a book of business. And for the longest time, I share with everyone saying that, hey, go out there to look for clients is good, but on our line of business, we don't look for clients that much. We look for partners, professionals who already have the clients, real estate agents, loan officers, insurance agents, CPAs. And I said it over and over and over again, just based on those 4 type of people, there are 3.5 million of them out there in the United States right now. All you need is just 0.001%, which is 350 people. And you have 300, not even 350, you have 35 people that constantly sending you deal, which is how I started my business. I'm not sure about Jarrod or Jason, but when I started out, I have about 55 people that constantly sending me deals. And I never go out there to look for clients. My focus is always out there to look for partners because partners, think about this, as a real estate agent, what is their focus? Their focus is to sell houses. And if that house is not funded, they're not going to get their commissions. So if I look for a real estate agent as a partner, his job is out there continue selling houses, and he will keep continually sending me deals to close the deal so that we can all make money together. But if you go out there to look for a client, what is the problem with the client? Number one, the client is going to shop around. You are not the only one in town that can do something like this. Number two, you might be only doing business with that client one time. No matter how good you perform, it is just one little things that they don't like about you, they will not come back. But with a partner, it's totally different. The partner will keep coming back to you, keep coming back to you, keep coming back to you, because the two of you are in the same trench. So this is what Sequoia's platform is all about. It built a platform so that you can go out there to look for clients, but most importantly is for you to build a commercial lending business if you understand truly what we are trying to do right here. So Jarrod, Jason, myself, we are your walking horse. You do not need to understand how the back end work. Imagine in this room right here, who is the most important person? Not me, not Jarrod, not Jason. You are the most important person. You are the CEO. As a CEO, think about this. How many CEO out there doing all the little stuff out there? No, they don't. What do? They hire the expert to do the work for them. They focusing on building their business. And if you want to make that kind of income, I suggest you to put the CEO hat on, and you are the most important person. Let us work for you. Let the system work for you. Let the Sequoia platform work for you. And all you have to do is just to go out. You don't even need to look for clients. Go out there and build a team. Bring in all those real estate agents and loan officers onto Sequoia, into your team, and let them go out there to generate the deal. And all you have to do is just sit back, relax, and enjoy that override. And if somebody is making $1 million a year, your override for that particular agent is at least $100,000. So think about this, guys. So we introduced Jason. Many of you already seen him. Now we have Jarrod, and these two big expert right here. They already know the industry very well. They are the one that will be looking at your deal. Not Alan Wu anymore. It's Jarrod. It's Jason. I mean, if they cannot close deal, no one can close deal. They have their own money. Think about this. They have their own money to fund our deals, ladies and gentlemen. So
yeah, great, excellent points, Alan. Thank you. I want to encourage you guys to also think about this. You know, every service, every company, essentially just solves a problem, right? And I would encourage you to think of yourselves as problem solvers, right? You're providing solutions, you're solving problems, and so the broad problem you're solving for everybody that you talk to, whether it's a broker or a builder or a realtor, is there's some entity, there's some business, there's some person that either can't or doesn't want to use their own cash to purchase or finance a piece of real estate. So they're either unable to or they don't want to. If they're unable to, then they have to borrow the money or they don't get to do the deal, right? If they just don't want to, they've got the money. I have $2 million in the bank, but I don't want to use $500,000 to do this deal. I want to borrow it because I want to use my money for other projects, right? I encourage you to think about those kinds of things. Ask questions like, once you tell them, hey, I've got money to lend, great. What are your rates? What are your fees? They'll start asking questions, but pay attention to what they ask. Come up with questions yourselves to ask them so that you can identify as quickly as possible what are their main pain points. What has been a great experience with a lender previously? What'd you like about it? What'd you hate about it? like just be honest, channel your inner Jarrod, just be blunt, right? Just what do you not like about the lending experience? And they'll just tell you, like 99 out of 100 people will just tell. Some people beat around the bush, but not many. They'll just tell you, I don't like the fees. I don't like the rate. I don't like the service. I can't get anybody to call me back, whatever. In that 5 minutes that you do what I just said, you'll get to know who you're dealing with and you'll be able to say, that's their problem. Because for some people, it's definitely price. They're just gonna beat you down and squeeze For other people, it's I'll pay anything you want. I just have to close next week. I don't encourage you to go out and try to find a lot of those. Those are sometimes very hard to do. But if they've got their ducks in a row, their act together, and they want to close in a week or two, bring it to us. Let us look at it and pay attention. If they say I'll pay whatever, let's test that theory. We won't go crazy, but we'll charge more than the minimum amount, certainly, to get something done that quickly. So I say all of that just as a couple of examples. Really get to know who you're talking to, right? Solve the right problem for them, and really pay attention. So OPM, other people's money. Alicia, you're on it. Absolutely. That's how most of us have made our money over the years, no question. So. Alan, let's see. Okay, yes, we can fund church franchise.
Yeah, I see Gigi asking about churches, franchise,
right,
nonprofit. Yes, we do that. We have a church loan that we can fund church. We can fund nonprofit organization. Franchise, yes, we do that all day long. We love that kind of deal, especially they're purchasing franchise that is SBA approved. We can do that all day long. Okay, and also I see another similar question with Erica asking, hey, do we just do business? Just do real estate loan? No, we don't. We actually do real estate loan and business loan. Business loan including working capital, equipment, business purchase, acquisition, things like this. Yes, we are a full. We can in Sequoia we can do pretty much all kind of commercial funding as long as the project makes sense.
Can I just jump in and clarify what I'm asking?
Yes,
Because
ma'am.
I feel like that's not being understood.
Okay.
I know that we do them. So what I'm asking is, I'm talking about viability. I'm looking at building a business, and I'm thinking because my background isn't in real estate and I have more connections in the nonprofit church world as well as business owners kind of thing who might be expanding and franchising and stuff like that. Is it viable as a foundation for me to focus on leveraging where I already have connections as opposed to trying to build these new connections that I don't have in the real estate world? That was really more my question.
Absolutely. Absolutely. That is what Sequoia's platform is all about. And that's why we provide all these different type of services to feed whatever your need is. And if you're focusing on nonprofit and churches, absolutely go for it. And we have agents that just focusing on doing gap fundings, and they don't do anything other than gap funding. Absolutely. Just choose your sweet spot and focus on it and build on it. And our job is to help in the back to support you, whatever you
Got
want
it.
to.
Thank
Yep.
you so much.
Yes. And that's good thing about a broker just like us, that we are very flexible. We don't just deal with one lender. We deal with so many different lenders. And let's say in the future you run into a project saying that, hey, I need funding for this particular project. For example, buying an airplane, for example. And if we have so many different clients that buy an airplane, as a broker, I can easily go out there to look for funding sources that can fund airplanes. No problem. So you tell me what business you want to build, and we make sure that we support you all the way.
I got a good guy for a plane, by the way, Alan. We can talk about that later.
Absolutely.
So, yeah. Yeah.
Absolutely.
But yeah, I always look at it. I look at it this way. I always say, you know, Gigi, the intersection of your competency and your interest, like what are you interested in? That intersection is where I would spend my time. If you want to learn real estate loans, by all means, let's do it. But if your interest and your experience and your competency is in franchises, churches, et cetera, do that. Absolutely. Like that's where you need to spend your time. And I would say that to everybody. So.
Yep. So let me spend the last few minutes to talk about our platform. Our platform is built so that I always say that our platform is like the Uber in commercial lending. Uber does not teach you how to drive. You already have the confidence to drive that vehicle, whether in rain, in snow, in good weather, in bad weather, whatever that might be. You already been through it. All they have to do is just to go through that platform and put a passenger into that empty seat, and all of a sudden everybody's happy. Same thing, that's what we're trying to do right here. You already been through the changes, whatever that field is, whether it's real estate, whether it's mortgages, whether it's a nonprofit, whatever that might be. You already been through it. You already have the confidence in that field. But what you do not have is the commercial lending pieces of it. So that's why we put this platform together, so that you are doing what you are good at. And you partner up with one of an advisor like Jarrod, who already been in the commercial lending industry for over 24, 25 years and been through all the changes, and he understands this industry very, very well. So now the two of you are in the same team and work with your client, and we close deal that way. And I think that is the uniqueness of what Sequoia Lending is all about. We can teach you about through the process. You can learn a lot of things about commercial lending. And if you want to learn more, go to our YouTube channel. I think we have over 70 videos and trainings out there for you to learn about what commercial lending is. And I don't know any other company out there can provide free educations like this every Wednesday night, right? But just remember one thing, guys. Just remember one thing. Don't make things too complicated. Do what you are good at. Let us do what we are good at. Together, we can grow this business together. And remember, you are the boss. I'm just working for you. Jarrod just working for you. Jason just working for you. And utilize us. Anyone else? Okay. If nothing else, well, thank you so much, Jarrod.
Oh, absolutely. Great being with you. I enjoyed it. Thank you, guys.
We're coming
Great
on,
questions.
Yep, I'm sure that that's a long way to go for us. And thank you so much for your for being with Sequoia and willing to become as our advisor. I'm sure that more and more deals will send to you. Now, guys, if you have questions, same thing. Send in the scenario form for us. Before you talk to me, before you talk to Jarrod, before you talk to Jason, before you talk to any one of us, please let us understand the deal first. Please do not just call it, oh, I heard something like this. Oh, I think it's this. Let's give us, send in a scenario form, let us understand the project, and then we can set up a call with either you or your clients. That will have a much more better conversation. Mo, you want to say something?
Yeah, Alan, can we do something in the Virgin Islands with him?
Virgin Island.
Yeah, he's looking at my background probably. That's where I am. Yeah.
Oh, okay.
This is not what Charlotte looks like. Yeah, I took a trip. Sorry, guys. So, no, kidding.
Virgin Island. If the deal is big enough, we can consider.
Let's do it. Let's do it.
Okay, we can consider. All right. Anyone else? Okay. If not, I'm gonna enjoy my snow dance. We have a huge snowstorm right here. And if wherever you are, please be safe. Please be warm. And we see you next Wednesday night. Good night, everyone.
Thanks, guys. See ya.